As one of the greatest investors of our time, Warren Buffett once said, gold is a way of going long on fear. It is in such times of uncertainty that gold is touted as a safe haven for those looking for shelter from more traditional volatile investments like stocks. Compared to investments in stocks, where even the biggest blue chip companies can and have failed, an investment in gold often seems less risky. But what about the US dollar? This is why the gold price went into meltdown last month, because the dollar rallied. As a result, the spot gold price, the cost at which the precious metal can be instantly traded, fell below $1,500 per ounce for the first time in 2020. As the coronavirus crisis deepened in March, risk-averse investors initially flocked to cash. That's right. Last month's fall in the gold price was also thought to be due to investors being forced to sell the metal and take profits from its gains in order to cover losses elsewhere, known as a margin call. However, when the US Federal Reserve cut interest rates to zero later that month, there was less incentive to hold the dollar. Cutting interest rates meant already low returns that investors received from investing in debt or bonds were nudged even lower. Gold has since regained its popularity, with prices climbing back up to its highest point in nearly 7 years last week at $1,769 per ounce. According to the World Gold Council, global investment demand for gold soared in the first quarter as COVID-19 pandemic fueled safe haven demand for the precious metal. Total gold investment demand, which includes bars and coins and gold-backed exchange-traded funds, investments, well, they climbed 80% on a year-on-year. A shorter supply of the precious metal has also bolstered its price as the virus has forced mines to close. Gold is also considered a good hedge against the risk of inflation because the rising cost of goods and services tends to erode the value of the dollar. And as central banks print more money as part of attempts to stimulate economies, global head of asset allocation at investment group Invesco, Paul Jackson, said some may fear this can result in inflation. If this were the case, this could impact the value of other assets. Meanwhile, gold over a long period of time tends to hold its value in real terms. And this should be considered as a refuge against this risk. Ways to invest in gold? Let's talk about it. While people can invest in physical gold, there's likely to be a huge markup on the price of coins, bars, and jewelry. Finding a ways of storing it safely, as well as finding a market to trade it through, can be costly. Buying shares of the companies mining gold was another way to invest. This can act as a leveraged play on gold. As if its price goes up, the profits of the mining company can go up even more, potentially boosting returns. Exchange-traded commodities, ETCs, are often considered the next best thing to owning physical gold. An investment vehicle traded in shares on an exchange, which tracks the underlying pricing of the index of the commodity. One such asset is GLD, which tracks the shares to reflect the performance of the price of the gold bullion, and is the first such backed assets to be backed by actual physical gold. In the near term, there's a good chance prices of gold will stagnate, but if the economic conditions continue to deteriorate, which is expected over the next few quarters, there's a good chance gold will continue trading higher, offering investors diversification and a chance to profit while other assets are hibernating. For lack of a better word, hope that helps. Speaking of gold, did you know that from 2005 to 2011, we saw a 320% surge in gold prices? Well, most of that was a direct result of the financial collapse of 2008. And in 2020 alone, gold prices are up double digits while stocks, they've collapsed. With the current crisis set to be more devastating than the so-called Great Recession, it's possible that another 300% plus rally could land the gold price at $6,000 per ounce. In order to help you make the most of it, James West and a world-class panel of leading gold experts are hosting an exclusive 1-hour webinar on May 7th at 1 p.m. Eastern Time. Don't miss this opportunity to unlock the extreme potential of gold from the comfort of your very own home. Click the button below to reserve your spot to the post-pandemic Future of Gold event. Talk to you guys soon.